Hello students, in this video I am going to explain about financial accounting concept. Here I am focusing on how to prepare trading account, profit and loss account and then balance sheet. Before starting this concept, still if you are not subscribed my channel means please subscribe it. Let me start today's topic financial accounting. After ascertaining ledger account balances through the preparation of a trial balance, a business concerns proceeds to prepare a financial accounting. Financial accounting is a specialized branch of accounting that keeps track of all companies' financial transactions. Transactions means purchases, sales, operations, whatnot, every activity in the business. By using the standardized guidelines, the transactions are recorded, summarized, and presented in a financial report or financial statements such as income statement and balance sheets. So first of all, we know what's the financial statement. The financial statement is a formal records of the financial activities and position of a business. Most of the companies put together a quarterly and annually financial statement in front of this wall. There are four basic financial statements used in the corporate world to show up the company financial position to this wall. The financial statements are first one, income statements, balance sheets, cash flows, and then funds flows. In this video, I am going to explain about how to prepare income statements and then balance sheets. Let me see what's the income statement and then balance sheet. First, income statement. Income statement is also called it as a profit and loss account statements. It covers a specific year of any time, quarterly 6 months and annually 1 year. In income statements, we will record all revenue and then expenses. Revenue is nothing but income and expenses are nothing but the whichever we are purchased, whatever the goods we are purchased, whatever the money we are sacrificed for getting some products into the company. In the income statements, we are classified into two types. One is a profit and loss account and one other is a trading account. In the profit and loss account, we'll record all the transactions, means all exchanging transactions which are related to the office. In trading account, we'll record all the expenses and all the incomes which are related to the manufacturing unit. Trading account is meant for manufacturing unit and profit and loss account, it is meant for any office purpose. So let me see what's the balance sheet. So balance sheet is a statement of assets and liabilities of the end of an accounting period. By preparing the balance sheet, the companies or any clients or any users, they can able to know what's the total assets of any business and what the total liabilities of any business. So first we know that was the asset. Assets are nothing but the proprietor's property or any valuable thing which is related to the business. Business related valuable things, we can call it as any assets which are be valued for any more than 2 years of any time. And next we have any liabilities. The liabilities is any refers to amount which belongs to another person, means which we wants to pay to any another person. All the payments means all the credit payments, all the sacrifice of any capital, all that comes under the liabilities. So now first we go with any trading account. See, in trading account, we record all transactions which are related to the manufacturing unit. So all expenses will record in the debit side and all the incomes will record in the credit side. Means expenses in the left hand side and the all incomes in right hand side. See, in this video, this is the manufacturing unit. Here they will produce some output. So if they want to produce some output means they want to require some materials. The material is first expenses is raw material. With the raw material only they can do the production. And second one, they wants to pay the wages for their labors. So second one is wages is an expenses. And third, they wants to purchase some related products or any goods. And fourth, it's a carriage invoice. The carriage invoice is nothing but transportation charges. And fifth one, it's an electricity bill expenses and water expenses and workspace rent expenses. So based on these expenses, all these expenses are related to the manufacturing unit. And next we'll go with an income. Once by spending all money on these items, they will get one output as a product or any services. So after the production, they will go with any sales. The sales are any income for any manufacturing unit. So in the trading account, we'll record all the expenses in the left hand side and all the income items in any right hand side. So now we will see what's the pro forma or a format of any trading account. See, in the trading account, this is any left hand side part and right hand side part. So this is the left hand side part and this is a right hand side part. In trading account format, there is no date column and there is no LF column. Here the only particulars amount related to the expenses and particulars amounts related to any incomes. So in this format, we will fill all the expenses which are related to the manufacturing. We'll record in the left hand side with items which are means the manufacturing unit, whatever the income they are getting inside the business, will record in the right hand side. So let me see what are the items we'll get in the left hand side. So first, if they wants to produce some good, means they need a raw material. The raw material, we can call it as an opening stock. And next, there will be purchases. They will purchase different goods or items or whatever it will be. So there will be some credit purchases and some will be cash purchases. If we add the credit purchases and the cash purchases, we will get the total amount of any purchase. And next, wages, payments to any labor, means wages paid to any labor. And next, carriage invoice means transportation expenses, and power and electricity expenses, and octroi charges means tax on purchasing good. It's an octroi is nothing but tax on purchases of goods. And next, fuel expenses. And coming to any right hand side, we'll record all the incomes. So here, based on these expenses, finally we'll get one product as an outcome. That product will sell in the market. Whatever the sales, we'll get some income. It will be a credit sale or a cash sales. So if you add the credit and cash sales, we'll get the total of any sales. So these are the items which comes under the trading account. Now we'll go with any balances. In the balances, the debit total must and should equals to any credit total. So here, if whatever in the debit side, expenses will be more and then incomes will be less, means we'll get the loss. If the expenses are more, expenses left hand side values are more and the right hand side means income values are less, means we'll get the loss. That loss we can call it as a gross loss. If income is more, means sales are more and we get the expenses are less, means we'll get the profit. Income is more, expenses are less, we can call it as a profit. Here in the trading account, we can call the profit as a gross profit and the loss we can call it as a gross loss. This is the format of a trading account. Now we'll see what's the format for a profit and loss account. See, again we'll go with this video. Just observe it. So for office purpose, what are the expenses or income we want to identify? First, we'll identify what are the expenses for maintaining this office. So first, for these employers, they want to pay the salaries And next they want to pay office rent, and third stationery items, and the fourth employers transportation expenses, and fifth office electricity expenses, and sixth water, and seven all office related expenses we can record in expenses side. And coming to the income, the first one is any interest received, and next is any discount received. So if you observe here, the same, this is the same, the profit and loss account also linked with any trading account. The same process here also, whatever we did in the trading account, we record all the expenses in the left hand side and we record all the incomes in the right hand side. This is the same format, same particulars amount and particulars amount, and here we want to record all the expenses in the left hand side and all the incomes in the right hand side. Let me see what are the items will comes under the expenses side, means it is in a left hand side. So first here we will, if we in the trading account, if we got the loss means we will record in the expenses side. If we get the profit means gross profit means we will carry forward in the P&L account in expenses side, means right hand side. And next we'll go with an expenses, means it's an office rent is an expenses, salaries expenses, taxes, office lighting, office power and electricity, insurance is an expenses, and printing and stationery is also comes under the expenses. Office repairs, remaining office repairs and all office expenses will record in the P&L account. Coming to the incomes, we'll record if trading account got the gross profit means we'll record in the income side, and rent received, interest received, discount received, all the receiving aspect will record in the right hand side. Now we'll go with the balances. The debit balance must ensure equals to a credit balance. If wherever, if you got expenses more and if you got income less means it was in a loss. If you got income more and if any expenses are less means it's a net profit. Loss means net loss. So next we'll go with a balance sheet. Balance sheet. So balance sheet, it's a mixture of two items. It's an asset items and then liabilities items. The assets are which are valued for any proprietor or any owner. See, let me see what are the assets. The first one, land is an asset, and building is an asset, and next furniture is an asset, and machinery is also asset, and cash in hand. If you have cash, if you have 1 lakh rupee or 1 crore rupee in your mm, home or in your hand or in your pocket means it is also an asset. And cash at bank is an asset, and goodwill means name and fame, the company's name and fame is also an assets. And next, bills receivables or accounts receivables means someone or due, due to pay amount to us means it is also an asset. And next, debtors. If you given some amount to some person on credit basis means it is also comes under the asset. And all vehicles we treat it as an asset. So in assets, land, building, furniture, machinery, cash in hand, cash at bank, goodwill, accounts receivables, debtors and vehicles all comes under the assets. So actually the assets are classified into current asset and then fixed asset. Means this part we'll learn in next videos. And coming to the liabilities, means liabilities means which we want to pay. The first, the some X person he sacrificed his money to put in the business, that part we can call it as a capital. And next is a creditor, means we are yet to pay to some person means it's a creditor, we are liable to pay. And next we are liable to pay our loans, and we want to pay accounts payable. The accounts payables are nothing but it's a credit purchases of any goods. So if you purchased goods on credit basis, we are liable to pay the amount. That part we can call it as any accounts payable. So based on the invoice we want to pay the amount. So let me see the what's the balance sheet format. So we have any in left hand side we'll record all liabilities, and in the right hand side we'll record all the assets items. So let me fill the all asset items. So first land, annex building and machinery, the same furniture, vehicles, cash in hand, cash at bank, and bills receivables, debitors, and total. Coming to the liabilities side, first capital, and then if you got the profit means we want to add net profit in the P&L account, it will be appear in the P&L account. If you have got net loss in P&L account means we want to minus it. So whatever it will be final, we'll make it as a final amount, and creditors and bills payables, loans and final. If here we don't want to balance it as a debit total and credit total as an equally, it's an automatically the credit means liabilities amount is equals to any asset amounts. Like this, we will do the financial accounting statements. Okay, so in this lecture I explain about what's a trading account and what are the items or comes under the trading account, and profit and loss account, and what are the items, what's the pro forma, and what are the items will comes under the P&L account. And third, balance sheet means what's the format and what are the items will comes under the balance sheet. In my next video I'm going to explain, and I'm going to do one problem. Okay, thank you guys.